The time of maximum pessimism is the best time to buy. The time of maximum optimism is the best time to sell. Sir John Templeton, legendary investor. That is great advice. And what have we been in lately, folks? Maximum optimism. We have the lowest unemployment ever. Economy's doing great. Everything's wonderful. And what do we see happening today? Now, this is just one day. Market down big, 1.67% on the S&P 500. The Nasdaq 100 down even more, almost 2%, 1.95%. 20-year bonds are up as one would expect, and gold is up a little bit. But let's jump into the picture. And of course, folks, we saw this coming, didn't we? Haven't we been talking about this? Haven't we been watching the market stalling? Even though we look back on our charts, 5 up weeks, but we saw this. Why? Because we're not listening to the news. We are in fact doing what? We are watching the charts. You buy on the rumor, you sell on the news. I was telling someone that yesterday. In fact, a close family member, and they were telling me about how they were talked into an investment back in the 70s, 80s, and of course the minute they jumped in, everything hammered down and they couldn't figure it out. Why did it happen? The news was so good. And I gave them that old adage, you buy on the rumor, you sell on the news. The guys on Wall Street know what's going on before you do. But guess who knows first? The stock charts. So amazing. So that's what you need to pay attention to. Listening to the news, trying to glean all that from whatever it is you read from business reporters that, again, are reporters. They are reporting on, hopefully facts, not just conjecture and guesses. But where you're going to find the real truth. You're going to find the real truth in the prices and in the flow of those prices, in the waves that we look at every day, the weekly, the 2-day, and the 4-hour. Now, let's go ahead and jump into these charts. 15 minutes a day, 10 to 15, all we ask. Every day the market is open if you want to get good at this. If you don't, then just listen to me for entertainment purposes because that's all the good it's going to do you. You've got to commit, my friends. The only thing that you're in control of is how you decide to spend your time. And you can find 10 to 15 minutes a day to follow the charts with us if you want to have financial freedom in your future. Otherwise, you can just work and hope Social Security will be there for you. Let's jump into these charts. What do we see happening for the week? Well, we have a red spinning top forming right now. Again, we're only 2 days into a 5-day candle, but we see price blowing through the weekly trend line. We see the price percent oscillator headed down for the first time in many, many weeks. And we see the red signal line coming up to meet it. Derivative oscillator also heading down for the first time in many, many weeks. So we'll continue. And again, we have a red candle, redder than any candle we've seen in months. So again, are we moving toward that summer low? Could be. Are we jumping in and pulling everything out and saying, hey, it's time to ride the market down? No, not yet. Why? Because we don't have a weekly vertical crossover. We don't have a trend until we have the markers of a trend, until we have the makings of a trend. By the way, everyone who's listening who's a Patreon supporter, we have our live question and answer tomorrow, 12:30 Eastern Daylight Time. If you are not a Patreon member and want to become one before tomorrow, you better jump in quick. I'll be happy to add you to the call, but you got to join this evening. So go ahead, make that happen. Maybe first thing in the morning. We will be looking for new members to add you to that call. You have to be at either the beginning level or the intermediate level, or of course the advanced level to get into that call. But again, and we'll also be doing a little later, we're going to be doing a rundown on the stocks and ETFs that our Patreon members are interested in. We do that once a month for them. So let's jump back into these charts. We see a red spinning top, indecision tending down. We go from the weekly to the 2-day. What do we see there? Well, of course, we saw this early, didn't we? We saw it on Friday. In fact, we already drew it back on the 2-day candle ending on Friday, a 2-day crossover going down. First crossover going down we had since the end of March. And again, we noted that, talked about that, saw the red spinning top. And of course, Monday started off some down. This latest 2-day candle is finished drawing on Tuesday, and it's a strong red down candle. Does have a bit of a wick on top. Not the strongest by any means that we've seen, but it is a complete change in trend for, it's the biggest red candle we've seen since all the way back on the 8th of the 2-day candle ending Friday, the 8th of March. So again, does that mean that everything's going down from now on? No, we do have a pullback underway. However, derivative oscillators, completely negative, big time, just flipped right over, and the price percent oscillator heading down negative. We go to the 4-hour chart. That's where we see the real damage. We see where things peaked out on Wednesday morning and then down for a day and a half, up for a day, down for a half day, sideways on Friday after that, and then, Monday, and then down, of course, Tuesday, both in the morning and the afternoon, down big, 1.67%. What are we waiting for? We're going to wait to see how things shake out. 2 days already crossed over going down. Is it going to be enough down movement to pull the weekly chart over? That'll have to be a really crushing down move. Could be. And if so, then we might be set up for jumping into a down move. But we aren't at this point because we don't know. There's not enough information to assess that a change in trend is really happening. So what do we do since we're trend followers? We wait for that crossover to occur. And typically once it occurs like it did last time, my friends, there was plenty of room to get in somewhere around the last drop, somewhere around 285, all the way down to a low of 233. Now, is that enough room to make a little bit of cash in your virtual trading account in a drop like that in an inverse fund such as SH? What's magical about SH? It's the inverse of the S&P 500, and guess what? It goes up. It goes up when the S&P goes down. Goes up quite nicely, doesn't it? And it's a way that you, if you have a little bit of sophistication, can practice, trade, and make money when the market crashes. If you've not listened to our training, Inverse Funds, How to Make Money When Markets Crash, something you might want to listen to. Okay, let's keep moving through these charts. We're going back to the weekly chart. We're going to the Nasdaq 100. We also have it pushing through quite strongly, down almost 2%, 1.95%. And of course, it's a red spinning top heading down. Price percent oscillators heading down for the first time in a hell of a long time. And derivative oscillator also heading down for the first time in many weeks. Solid red spinning top. Haven't seen that till all the way back of the last big one, or the last one, period. I'm talking solid red spinning top back on the week ending the last week of the year. That was 12/28/18. And since then, the market had been heading up through January, February, March, April, and now into May. Just in time for the summer pullback. We'll see. We go from the weekly to the 2-day. What do we see there? Well, of course, we called the 2-day crossing over back on Friday. And now we have it pushing through this latest 2-day candle through the weekly trend line. Price percent oscillator negative, derivative oscillator negative. Again, just like the S&P 500, waiting for this to sort out to see if indeed it is going to be a strong enough downturn to let us jump into an inverse trade. And what is an inverse trade on the Qs? Well, that could be PSQ. What is that? That is the one-time short. In other words, it's not a double short, triple short. It's just, it moves percentage in the opposite direction when, again, the Qs is down. We'll look at the 4-hour chart. You can see that PSQ is up. So we'll be looking and we'll be talking about all this if indeed it shapes up to be something in the future. Let's go to 20-year bonds now. We're going to go back to the weekly as we always do. Always start with the biggest chart first. Go into our second week of up movement. Pretty nice, decent up movement. Remember, we could not get a crossing over going down on bonds. Why is that? Maybe the bond market had some idea somewhere. And again, remember, this is like a beehive. Not everybody's talking to each other. Everybody's just sort of following what's the flow. And the flow wasn't enough energy to cross over going down, so bonds didn't. Bonds typically are a place where money runs to when the stock market's not doing so good. And bonds just wouldn't cross over going down, would they? Going back about 3-4 weeks, we had some, not fake outs because they never occurred, but they sure started looking like they were going to cross over. At some point during the week they did, then they pulled back. Remember, you never call a candle until it's fully drawn, and a weekly candle is only drawn at the close of the day on Friday. Well, 2 days into this, we have a green up candle, price percent oscillator pulling away from the red signal line, and the derivative oscillator is negative. And again, losing some of that negative, almost positive, not gone over quite yet, but that price percent oscillator is pulling away from the red signal line. We go to the 2-day chart. And look at that, crossed over at the end of the day, just barely. So we see that the 2-day chart has now crossed over, going up. That is important for us to see and for us to track, because now we have the 2-day and the weekly moving in the same direction. That is important, is it not? You have to have both the bigger charts, well, the big and the intermediate, moving in the same direction. And when they are, they give you a potential opportunity to jump into a trade. In this direction, could possibly be up. Now, what do we have to wait for at this point? Well, we have to wait for a bit of a pullback because we don't have a trigger to pull since we have the 4-hour chart moving up. And you might say, well, why wouldn't you just jump in now? Because far too often you jump in at a high. And you might say, well, what if it never crosses over in time for us to jump in before it rotates back over going down when the up moves over? Well, guess what? That means it never set up for you to jump in. So you let it go. First rule of investing, don't lose money. Second rule, remember rule number 1. First, you don't lose money. You don't try to catch a knife that's dropping into your hand. You move your hand away. So we want to wait until things set up for us. And when the rules work, we apply the rules. When the rules don't work, we don't do it unless you want to get hammered. Now, again, I'm not at all against you trying things. But again, trying stupid things, you can sure try them. And again, I encourage you to practice. Practice, practice, practice. Learn from what you practice. But again, that's why we're practicing without money. That's why we're doing virtual trades, to learn how this works and not get hammered. What do we see going on in gold? Gold was up for the day 0.33%. But again, that doesn't change the trend in gold. Gold is still heading down. We see that the derivative oscillators lost some energy. Price percent oscillator not heading down at the same angle it had been the week before, but off a little bit. So far for the week, we have a green doji, which means indecision, lots and lots and lots of indecision tending down. We do see that price, however, has passed through both the 2-day and the weekly trend line. So that is significant that both those trend lines have been blown through. And we'll just wait and see how things sort out on the biggest of our charts. And look at that 2-day chart. Hasn't crossed over going up yet, but darn sure appears to be headed that way, sitting right there, having passed through the 2-day trend line, sitting right on the weekly. We'll just wait and see if we do have a crossover going up. We, of course, will note that. That won't happen until possibly until the close of the next 2-day candle, and that won't be until Thursday. Remember, it's a 2-day candle. We have all day Wednesday and all day Thursday before that candle finishes drawing, and lots of things can happen. Let's go to the 4-hour chart. That 4-hour chart crossed over going up in the afternoon on Friday, and we have seen it pretty much go up since then, and up in the morning and up further in the afternoon on Tuesday, pushing through at the end of the morning. Well, yes, at the end of the morning, pushing through on the weekly trend line on the 4-hour chart, and then further up in the afternoon. So we'll wait and see how gold continues to sort itself out. And of course, we're in some flux right now in the market. We'll continue to watch and see what we have to see. I hope you guys are spending some time filling out your daily market worksheets, your weekly market worksheets every Friday at the close of business, and your trade worksheets when you're doing practice trades. Again, If you have not purchased our book, I encourage you to do it. We were fulfilling orders today. Actually, we've got overseas orders coming in. We've got orders in the States. We're in the 9th printing of the book, Charting Your Way to Wealth. If you don't have it, you need a copy to understand what it is we do here. Also gives you an opportunity to support all the free work that we do. Same with our Patreon members. Oh, you can see links in the show notes to be a Patreon member. You can also see a link in the show notes to purchase the book. If, however, you live outside the United States, we love all our friends everywhere. Canada, Australia, New Zealand, England, India, Pakistan. Wherever you may be, we will get your book to you. You just have to email us, cw@chartingwealth.com. For some reason, our clearing service, Square, won't take credit cards out of the country, out of the U.S. So email us, cw@chartingwealth.com. We'll send you an invoice. Pay that PayPal invoice. We'll send you your book. I have several folks who have written us over the last day and a half or so. I will make sure to get your invoices out to you this evening. And again, we just appreciate you guys. If you do, again, want to be a Patreon member, go ahead and sign up. I'll be looking for new sign-ups, and we will get you involved in our call tomorrow. When you do sign up, go ahead and email me and let me know if you have any specific particular question, and we'll be happy to try to address that with our whole team. And to all of our long-term Patreon members, I was going over the list today, and there are so many of you. I hesitate to start going through all of your names, but you've been with us for months, and I just thank you for your dedication, for your support. You help make things possible, pay the fees that it costs for bandwidth and all the other stuff that we do, our texting service, charting service, all the things that cost us money. You help defray those costs, and we thank you so much. And again, my friends, we like to hear from you. cw@chartingwealth.com. 10 to 15 minutes a day is all we ask. God bless. All the best from the whole team here at Charting Wealth World Headquarters.